Hey everyone, so today I want to show you how to look at the average true range of the S&P 500 index. This is important to trade any zero-days options or futures options or any kind of underlying ticket that you trade. I normally look at the daily range, and I'm going to show you the average true range of the 14-day period. So the look-back period is basically 14 days, which means the number that we see is actually an accumulation of last 14 days worth of opening prices, closing prices, the gaps in between. That's what average true range calculates, and for that reason, it's a good indication of how the market will react. And I'm going to show you how it did today, because I was looking at it before market open, and now we are probably 3 hours into market open, and see how it has reacted, whether we would have won the trade or not, or would have lost the trade. So let's go on the screen and then I'll show you exactly what I mean by this. This video is totally about trading 0 days expiration options in S&P 500 index. We're not looking at the futures options today. We are looking at the index options, which are cash settled, meaning you don't have to take delivery of anything. You have to don't give up any delivery of anything. Everything is cash settled at the end of the day or when you close the contract. Okay, let's look at the market right now. I am in the S&P 500 index market. The reason I already have this up is because I was looking at this 30 minutes before market open today. I haven't changed anything on it. This is the iron condor strategy that I was looking to put on when the market would have opened up slightly lower or slightly more sideways, but it just went through the roof. Now, this is the reason why we think, or at least I think, that average true range works. First of all, what is the average true range of S&P 500 index? Okay, if you want to go on the chart and then come and then bring it's a simple study on Thinkorswim. Just pick the ATR, and I use 14 days Wilder's study. That's, again, there are a couple of different options in there. Just pick the one that you like, but I like the 14-day look back period because I'm trading 1-day options here, right? My go-to strategies are 45-day options, but Zero DTEs are obviously 1-day options, and therefore I want to see how the market has done in the last 14 days versus the last 45 days or 1 year or 3 months or 6 months. I don't want to look back on that kind of period. I want to look back a very short frame, short-term period of 14 days, maybe 20 max, maybe 22 days, which covers the whole month of trading. So, and that's why I have this kind of indicator here just to tell me exactly what the S&P range has been in the last 14 days. Now, if you look at this number, what this indicator does is basically grabs all the opening and closing prices, then checks up all the gaps in between, and then smooths everything out to one number. That's how you read this chart. This is a dollar amount. This is the tick amount. So what 50 is telling me here is that S&P 500 has been moving 50 points up or down every single day for the last 14 days, or on average in the last 14 days, which means if I were to take a position today, I would try to and be outside of this 50-point range. And that's what I tried to do this morning. Now that we understand the average true range, which is the ATR indicator on Thinkorswim, you can bring that up, do whatever style you want, and the look back period that you like. But I hope you understand this now, that this number 50 gives me the up and down range of this index on a daily basis, meaning it can go up 50 points or down 50 points, or it has been doing that for the last 14 days. Now, what do we do? So now we understand this. Go back here on the trade tab. Actually, let me show you the trade that I was about to put on. So in the morning, 6 o'clock Pacific time, markets open at 6:30. 6 o'clock Pacific time, the index was trading at exactly 6,000. Not futures. I'm talking about S&P 500 index. It was trading at 6,000, meaning it was about to open at 6,000. Well, it wasn't about to open. It was about to catch up with the futures and about to open a little bit higher. But the close price from yesterday was 6,600. Sorry, not 6,000. 6,600. Okay. So based on that, I took the 50-point wide strikes from that 6,000. So if you look at, let me show you this. So if you look at my strikes here, I have 50-point out call spread, and then I have a 50-point out put spread. Okay, I think that's exactly what I have. So on the put side, I went back 50 points. On the call side, I went up 50 points. So that's how I created this iron condor. And that's how I would have done if I were to trading this ticker or underlying market at that point. Now, I just wanted to double check something. Now, this is at that moment, I was getting $2.45 here. So my net credit when I was looking at this trade was $2.45. Let's call it $2.50 around. Okay, so I was collecting $250. I was putting down $750. You can see it on the chart. It's a $10 white iron condor on both sides. I was collecting $250, putting down $750. So that was a good return. I would have closed this trade at 25% max profit. So out of the $250, I would have probably collected, I don't know, maybe $70, $80, maybe $100 if the market was not going anywhere. And then I would have just, looked at another day. But look, this was at 6 o'clock, and it's 3 hours in. The market is still, it hasn't breached my upside. But that's why it's important to put the trade on that after the market opens, 1 hour into the market open. That's when I like to give the markets at least 45 minutes to 1 hour to calm down because most of the moves happen in the first hour and the last hour of the market trading. Okay. So if we can avoid those two windows, we can actually, catch the mostly sideways event throughout the day, unless there's a Fed meeting going on. Even those meetings are like after the market, after close. Most of the earnings announcements or all of the earnings announcements are also after close or before open. So this window that you can catch it between could be the one that doesn't do much and stays sideways. However, this trade, would have been a $70 loss at this point right now, but I would not have taken it out because it's still within my range. Okay. Now let's set up a iron condor as we would have done 1 hour into the market and see how much credit are we collecting now versus what was available in the morning. Now we only have a few hours left in the market for today. What is the SPX iron condor giving us at this point where the market is trading as, let's say, 66.50? It's already moved up 50 points. Okay. So I'm gonna take 50. I cannot go back 50 points. So I will have to take something around here where the market is at 25 delta or even 66.30. Okay. So I can only go back 20 points now, which is fine. So between now and market close, probably the expected move is 20 points. And that's what we will try and construct and see how much credit can we collect with a 20-point wide iron condor. Okay. Not 50-point wide, which I was doing or was trying to do in the morning. Okay. 66.30. I will go back 10 points here, 66.20. And then on the call side, I'm taking again the 18 delta, which is 66.60, which is not even 20 points from here. It's trading at 66.50. So I'm only 10 points out. Okay. But this is what's available now because most of the day is gone. That's why it's important to put the trade in within the first hour or just about at the hour mark. And that's how I like to trade it, because then you can get at least some credit out of these options. But right now you're getting 170. Still not bad if you want to be in this trade for like maybe a few hours. There are only a few hours left, right? There's like 3 hours left in the market. So you can still collect 170 and you will be putting down 830. You can still collect maybe $70 to $80 here, but there's not, and you can see all of your P&L will come from theta decay in these options. This is still not a bad trade. Look, theta is like $165 and you're collecting 165. So almost all of it is going to come from your theta decay in this trade. But here's the thing. Do you want to do this trade right now, or would you like to have collected a little bit more money at the start of the day? This same spread or iron condor strategy would have probably given you maybe around $2 at the beginning of the day. So that's my take on this. This is how I trade zero DTEs, by looking at the average true range of the product. And it's not just the index product. You can look at the average true range of any underlying ticker that you're trying to trade on zero DTE. Apple. Let's say, for example, Apple's true range is $4.50 in the last 14 days. Now you can go back and look back, longer periods here, but this number will keep going up if you look at longer periods because the market moves a lot more. It has more room to move. I like to look at 14 days for my zero DTE trades. For my 45 DTE trades, it's a different cycle. I look at other things which I've covered in my other videos. If you like my content, please subscribe. And then, one more thing I want to invite you for is I have a 5-day trading challenge that I run, and I teach all these kind of strategies: short puts, short calls, spreads, iron condors. Go on this website, take a look, and then see if you are interested in doing anything else. I do run free masterclasses. This is a 5-day challenge that will teach you or get you off the ground. It will not make you the most profitable trader, but will get you off the ground to do things yourself. There are a lot of takeaways in these classes, like which strikes to look at, how to set these trades up, how to manage. Management is like a big thing here in short options. So how to manage these trades and what to do when they go wrong. I highly recommend you to sign up for the newsletter. I write it once a week, and I try to cover the most important aspects of the week, and then I provide one trade setup idea in that newsletter. So I hope you like the video. Any comments, just put it on in the chat. Thank you very much. Bye-bye.